Good morning, all. So I am back making these videos again. I had to stop temporarily because I am embarked on monk mode month, which those of you who are in the Falcon community will know is what many of us have been doing. We have been, as the name suggests, living like monks, as it were, and we've been living a very disciplined life, more than what we would even normally do. Okay, there's many tasks involved, and as a consequence, I'm doing things in the morning now. I have a morning routine, which was making it difficult for me to make these videos. However, I have adjusted my time blocking ever so slightly, and I've managed to squeeze these videos in once again. At the same time that I decided to cut out making these videos, my microphone also packed up, so I couldn't actually make these videos even if I wanted to. But late last night at around 9 p.m., I managed to find the root cause of the problem as to why my microphone wasn't working. I won't bore you with the detail, but basically, Google Chrome had done an update and it had reset the default settings so that my Chromebook's microphone was actually the default microphone and not the external condenser mic, which I'm currently using. But anyway, without further ado, I'm back in business, so let's break this pair down for you now. I actually missed making these videos, which is one of the reasons I've tried to squeeze making them into my schedule. One of my tasks once again. I know a lot of you take value from these, so I'm going to try to continue to bring you that value on a daily basis. So Aussie yen, why am I looking at this? There's most of my pairs look like they need more development, look like they need another 24 hours. The pairs that I have in my watch list, as you can see there. Okay, and even this pair, which I haven't watch, I'm not entirely sure this is going to be ready by the end of the day. But if it does, great. Okay, so the narrative as I see it is we've broken these lows, we broke these lows, washed people out, moved to the upside, and you can see that we are trending in this kind of impulse correction continuation, that kind of manner. On the higher degree, we may eventually take out some of these near misses here, which near missed to that high there, where there was a sharp sell-off. Okay, that is longer term, but again, that doesn't mean that we can't capitalize as we draw down, capitalize on a move to the downside in the meantime. Okay, so if we just zoom in to this piece of price action here, we can see on the weekly chart we have this kind of 1, 2, 3 touch structure where let's try that again, where the second touch breaks above the first touch but fails to tap into the area of value where there was a very sharp sell-off last time around. Bear in mind this is the weekly chart. Okay, so you have this kind of structure here. I am mindful of the fact that, typically speaking, I'll talk about the middle section of this structure as we drill down a little bit. I was just going to talk about it then. We just get rid of that. If we just zoom in ever so slightly, you can see that we had bullish momentum. Okay, this was last week's weekly close. However, we wicked to the area of value, not really through it. You can see there it was ever so slightly through it, but we wicked to the area of value. And what do we know? As I always say in my videos, when we have such a standout liquidity point on the higher time frames, and particularly when we have such a standout liquidity point such as this, we normally break above before moving to the downside, catching people the wrong side of the market who start buying once it breaks above. Okay, many of them believing that this, once it breaks above, acts as support, because apparently resistance becomes support once it's broken above, and then we see the move to the downside. And what might act as the catalyst for that is the fact that last week's weekly close was very bullish. Many people are very zoomed in. Okay, so they will see this bullish candle. They will not necessarily be looking left, which is important to do in trading. They won't have a ray line plotted here. They'll see this and they go, yep, that's a good indication for me to get long. We broke above here. This is now resistance. This is now support. So they will start buying, some of them. straight into this high and then get caught the wrong side of the market, potentially. Okay, we never know what's going to happen in trading. As I zoom down, you can see that we do have this potential evening star formation where we have this bullish wick which gets filled. Okay, I talk often about how these bullish candles with a big green wick above them typically get filled, but in this case, notice that it gets filled by another bullish wick. Okay, so although this could sell off, we may come up again to fill this wick because there was still a little bit of momentum on the weekly chart. This is not as if it's just a a complete doji candle like that where there's almost no body to the candle. There is still some bullish momentum there. Okay, and just touching on what I was talking about previously, if I just this three touch structure here that I was referring to, okay, that there. We don't normally see, so if this is the middle section here, we don't normally see a middle section which is more impulsive than the moves up in and out of it. Okay, so that is a little bit atypical, but we still have a 1, 2, 3 touch structure. That is just a point of note. Okay, so when you're analyzing these structures and when you understand price action, it's often in the small details where your profit and losses lie a lot of the time. Okay, but as we drill down, there's just another thing I wanted to touch on very quickly is we have this impulse correction potential continuation, and we know that the leg out is often of a similar length. So if this is an impulse correction continuation, again we have a move down. If this is the middle section within that, which is more impulsive than the moves into and out of it, that is another slightly strange characteristic, but that is in keeping with how Aussie yen has been moving. But if this was the move out, that would take us up to here. Okay, so that would take us higher, slightly higher as well. Notice that we haven't fulfilled that move. We don't necessarily have to fulfill all of it, but that is another factor in my thinking. Okay, as I drill down, you can see all the way up, this is non-progressive price action. So this is giving me a clue that we will be due a big sell-off. We've just corrected our way up all the way. This is kind of one piece of its own. I shall touch on this in a minute, but from here onwards, we've kind of corrected all of the way up here. Okay, and notice, crucially, that we've moved down. Is this an impulsive move? No, it's a corrective move. We've moved down correctively, and we've ended on this 4-hour bearish candle with a big wick below it. Okay, and if we just analyze the price action in a little more detail, notice what's happened on the way down. Okay, so we did break slightly above here, and on Friday I was looking for an impulse down followed by a 5-minute continuation as a minimum, and then I would have got short. There was no 5-minute continuation, and I would have been able to manage that down to here, but we didn't get that, so there was no entry for me. Okay, and notice how has price moved down. Okay, sharp move down, sharp move up, sharp move down, consolidation there, but we ended on this big wick. So once we start wicking and seeing these sharp pullbacks, that gives me a clue that we'll likely do the same again. Likely tap into one of these two lows there, find liquidity. You can see we haven't really reacted from this one, so it wouldn't surprise me if we come back down, take that out, and then potentially move to the upside to break above that higher time frame high that I was talking about. And then this would be the middle section, and then this would be more corrective than the impulse into it and the impulse out. Okay, if that was to occur. If we just, I think there was something I wanted to show you on the 4-hour. Yeah, so it wouldn't surprise me, because this is bearish, it wouldn't surprise me if we came down to fill that wick, tap into that wick, with this being the near miss, break below, break back up, push into that high, and then this becomes like an expanding pattern where we have equal lows and higher highs potentially. And so what I'll be looking for with that in mind is if we push up to this area of value, then I've just tried to simplify my forecasts a little bit just to make things easier. So Hopefully this will be easier for you to see as well. That's partly why I did it. So we put that guy, I'm going to keep that on the chart actually just for a second. So if we push up to here, again, this may not happen by the end of the day, but if you just look at, for example, this move down, that took only 3 hours, 1, 2, 3, or maybe 4 hours, right? So we could be all the way back up there if this is an impulsive move out, by around sort of 10 o'clock, 10 a.m., 11 a.m., and we could be up in that area. If we tap above the area, if we tap into the area of value there, okay, we would then have tapped into this again. We would then have potentially that 1, 2, 3 completed structure. I will be looking for a move back down, as you can see here, minimum entry requirements, tap into the area of value, a 1 hour impulse down below the area of value. So there, if it's a 2-touch 5-minute continuation, then I would take a reduced risk entry on the break, as you can see here. If it was a 2-touch 15-minute continuation, so 6 to 8 corrective 15-minute candles, then what I would do if we had that what I would do if we had that is I would drop down to the 5-minute chart, and I'll be looking for a risk entry from within the structure like that. Okay, so if we had the two bottoms and we tapped just into the first high, it may be a 3-touch 15-minute structure, but if we tapped into the first high there, I would look for a risk entry within it with a minimum 10 pip stop. So we may have something like that. And if I couldn't get that, if we didn't tap the first high again and we just had the two bottoms, then I would just let the reduced risk order entry tag me in, or reduce risk entry on the break, as you can see there. Okay, so that is the entry requirements. And what I would do then is I would target, if you can see, right? So all the way up, this has been a corrective move. Each of these lows has tapped below the previous high. So tapped below it, pushed up. You can see there, tapped below that high, pushed up. So this is a corrective move. Okay. Where is a good profit taking area for us to get out of the position? Okay. So I'll be able to manage this most likely down to this low if we pushed up for something in the region of 5%. Okay. If you look at this low, so we have a low there which pushed up sharply. This kind of didn't break below this previous high. Okay, it kind of retested it, and it just also happens to be where price came down and retested this high here. Okay, so this would make sense to be a good profit taking area. Okay, because I would imagine people getting out their positions here. So that doesn't mean that price couldn't keep going if it got down to the area. But what I would anticipate is some larger corrections, either below there or through it, which we wouldn't really want to sit through. Okay, so that's the area where I would anticipate price potentially pulling back sharply. We know that at these kind of 90% rules, the base of a correction or a piece of structure, price tends to pull back, and it can often pull back 50% of the move, which would mean we'd leave a lot of profit potential on the table. So what I'll be doing, that will be my target down there. Let's just get those doodles off of the chart. That would be my target. Whoops, what have I done there? Let's just get that off. So that would be my target from there to there. And what I would do is I would use the mechanical management system, and I would measure from this ray line. So from the higher time frame structure, well, actually by this point, we would be measuring it from here, because this would be the structure. And I would measure from there to there, and I would set a take profit at the 90% rule while simultaneously trailing my stop loss. Okay. And then that would give us, if we just move that over, so the take profit would be set there at about 10%, and I'll be trailing my stop losses if that got triggered. What I meant to say as well is the 90% rule of a piece of structure or a corrective channel such as this is often where we can pull back 50% of the move. Okay, sometimes it happens at the base, but it often pulls back from the 90% area of a range about 50% of the move. That could happen as well. So that's what I would do: set the take profit, trail my stop loss, and then not try to be greedy and catch the whole move. If we broke below here, it could be all systems go for a move all the way down to potentially this low here, which retested the back end of that and but we don't need to catch all of every move in order to make money. The longer you're in a trade, the more exposed you are to um, all kinds of slippage and gapping and news events, etc. So trading is just about you know taking these kind of smaller wins. Sometimes that 10% is not a small win in my opinion. So an experience. So many people are trying to catch home runs. Those of us who are trying to be professionals are doing things in a professional manner and focusing on small, consistent wins. So that is what I'm going to be looking for today, folks. I'm not interested in anything else. If we were to, I'm not interested in trades down here at the moment. I would want to see something more deliberate. If we broke below there, I would want to see something more deliberate, which wouldn't be ready by the end of the day. Okay. So that is what I'm going to be looking for. That is Aussie yen. If it doesn't shape up, I'm going to go and do something else. Okay. So I hope you've enjoyed this video, and I'll see you again in the next one. Thank you very much indeed for watching.